Hello everyone. Let's continue with the topic of national income. Today we'll be starting with the methods of calculating national income. We all know that according to the income method, that is first method, which we'll be discussing today for calculation of a national income, it is net income received by all the citizens of a country in a particular year that is added up. That is total of net rents, net wages, net interest, and net profits. However, income received in the form of transfer payments are not included in it. National income at factor cost is the national income calculated by income method. So, World Bank has adopted gross national income in the system of national accounts in 1993, replacing the term gross national product, which has been popularly used in the Indian textbooks for stating the calculation of national income. So whether I'm talking about gross national product or gross national income, I'm talking about the one and the same thing, which was used earlier in the versions of SNA and the World Bank documents also. Income method involves certain steps, which I'll be detailing in the following slides. So first of all, starting with what is national income? It refers to all the goods and services produced in a country in a given period. This period is normally an accounting year and not a calendar year. The measurement of overall economic performance indicates growth and development by analyzing national income. Each and every economy's growth is being judged by the term national income. And national income shows the performance of an economy, how well it's doing in terms of growth and development. There are primarily three methods which are used for measuring national income. We'll be discussing each one by one, but in today's topic, we'll be only discussing about income method. So we have production method, we have expenditure method, but this particular presentation will only be focusing on income method for calculating national income. So let's begin with the income method first. Income method stands for, obviously, as the name suggests, income, right? That is the earnings received by the individuals and businesses in a year. I'm calculating it for a year minded in the form of wages, rent, profits that are added together for calculation of income method and to calculate national income by the income method. The total market value of the products by the producers is what they are being paid. We know that there are four factors of production, that is land, labor, capital, and entrepreneur. For land, we pay rent in economics. For labor, wages and salaries are being paid. And for capital, interest is being received. An entrepreneur receives profit in terms of the efforts he's been inputting. So we have four factors of production which generates four factor incomes. Remember the same. So there are three main components for calculating the national income, that is national income at factor cost. First is compensation of employees. I'll be using COE for the same. And for operating surplus, we have rent, interest, and profit. And third component is mixed income. So all these components, when are being added up, we come around at NDP at factor cost. And when we add net factor income from abroad and into it, we come to national income. National income is being calculated after this. So first, starting with the compensation of employees. Compensation of employees is a kind of remuneration paid by the employers to the employees. Remember, it's paid by the employers to the employees for their productive services. Each and every effort by an individual is always being paid. Nobody is there in an economy who is rendering free of cost services. Every service which is being rendered is being paid equally. So there are three kinds of compensation which is being considered for calculating compensation of employees. First is wages and salaries in cash and kind. We know that salaries are paid in cash, but obviously we know that salaries are, or there are salaries in terms of kind also, like for any kind of house given by the employer to the employee, provident fund scheme contributed by employer for the employee, any kind of car provided to the employee by the employer is being charged by the employer in terms of wages and salaries. Then is employer's contribution to social security scheme like Provident Fund and ESI. If the installments are being paid by the employer, it will be calculated under compensation of employees. Last but not the least, third component of compensation of employees is pension on retirement, or we can say it as retirement pension. It's a part of my remuneration for which services are being rendered during my tenure I was being working. Mind you, two things which are not to be included under the pension on retirement is old age pension, because you are not generating any good or service for the same. We are not generating any good or service for the same. Same things applies for the transfer payments also. These are mere transfer from one pocket to another, like pocket money by a father to his or her kids is known as transfer payments. The income was being calculated when it was being generated. So any movement of that income would only be considered as transfer payment. So there are three main components of compensation of employees. First is wages and salaries in cash or kind, plus employer's contribution to social security scheme. Any kind of scheme by the employer for the employee for my social upliftment is added in compensation of employees. Last but not the least is retirement pension. So these three main components constitute the part of compensation of employees. So if you find the term directly, then use it. If not, then you need to add these three main components to calculate first compensation of employees. So my first component for calculating compensation of employees under national income by income method is involves around three main parameters. Next we have, so first is if I need to calculate through income method, we know we have first is compensation of employees. For that, we need to add three parameters: wages and salaries in cash in kind, social security scheme by employers, then is retirement pension. Next, we have operating surplus as a main component. If you find operating surplus as written over there, use it directly. Else, you can add rent, interest, profit, and royalty. Calculate operating surplus. Third component is mixed income. Third component is mixed income. So it's usually written like this as mixed income in the economy. Since it's not easy to calculate mixed income, so normally we add the term mixed income as it is. It's income from the other sources which are not being calculated like in the form of main parameters. So when we add these three components, we come to this is NDP at factor cost, or I can say it's a domestic income. It includes compensation of employees plus operating surplus plus mixed income. When we add, if we want to calculate national income stands for NNP at factor cost. It's NDP at factor cost plus net factor income from abroad is being added into it. We get the answer of national income, that is net national product at factor cost. So what are the major limitations for calculating national income through income method is first is exclusion of informal sector. A huge part of the economy like street vendors, small farmers, home-based businesses often operates in cash without formal records. That's a major issue in various economies. Since the income is not reported to the government, the income method often underestimates the actual national income. Next, the main component of the national income, that is mixed income. It's not so easy to calculate the term mixed income. So why I put a pause is reason being Mixed income, there are many people in our economy who are self-employed, like local shopkeeper, freelancer tutors, where it is hard to separate their wage from their profit. There is no differentiation between the same. So, but these people are surviving the economy. So their income is considered in the part of mixed income. Estimating it accurately is a major statistical challenge for the economists. Non-monetary transactions. Income method only counts activities that involves money exchange. It fails to account for unpaid work, like the ladies who perform the work 24/7 in the houses, household chores done by the family members. Then barter system, trading of goods for other goods, still common in some rural areas. Self-consumption, n number of farmers consume the goods which they actually grow, like wheat, rice. So they don't sell the whole part, or I can say they don't sell it to in the market in the terms of profit. Some people grow it for self-consumption only. So that poses a major threat that how to calculate the national income so accurately. Threat of transfer payments, income that do not result from productive services. That is, they do not generate any goods and services for the growth of an economy, like old age pension, unemployment benefits, pocket money are called transfer payments. These are included from national income calculations. Sometimes it can be confusing for students to distinguish between earned income and transfer income, because one who is spending that income, they consider it as the part of their income. Most critical parameter is black money next. That is unreported income. Income from illegal activities like smuggling, gambling, tax evasion is never recorded. This parallel economy leads to an inaccurate picture of the country's total economic strength. So these are a part of being these limitations. Still, income method provides us in a very precise manner the calculation of national income. So mind it, three parameters, that is compensation of employees, operating surplus, including all these, and mixed income. We come to the national income at NDP at factor cost. And when we add net factor income from abroad into it, we come to the NNP at factor cost. So the last thing I should add is net factor income from abroad into it. So that's all with the income method. Good luck and God bless you all. Thank you.